Hey everybody, Greg Rice here in the bucket, Pawtucket, Rhode Island, and tax valuations have gone through the roof. Tax valuations have gone absolutely bananas. And what I'm going to do is go over some of my valuations that have increased in Woonsocket. I love Woonsocket. It's a great place. I have a great project going on there now, the Sacred Heart Church. But the taxes are going up, okay? And I'm going to read you some of the increases and also what the letter states specifically. So, breaking it down to the simplest point, every city or town across this great nation has a budget for their police, fire, medical, schools, internal, admin staff, you name it. They have to pay these people. They have to keep the lights on in these buildings. They have to do all sorts of good stuff. So who pays for that? It's us as the homeowners. And what they do is they look at what their budget is and they say, all right, we got $5 million of a budget. This is a very small example. We have 1,000 structures in town. We need X amount in revenue on average from each property. So they kind of put it all in one umbrella and try to figure out the best way to jockey to that number. But with the inflation and the home values just soaring in the last 2 to 3 years, they're jumping on that bandwagon by now getting beautiful and favorable tax valuations for their rolls. So some properties that I have in Woonsocket, I'm going to go over. Actually, all of them have gone up. But the caveat, and I'm just going to look at my computer because I got the letter, is this. Please do not apply the current tax rate, which is the mill rate, which in Woonsocket I think is like 36 per thousand. That's how you calculate your taxes, to the new proposed assessment. A new tax rate will be established once the values are certified. So what that means is this. For example, if your house in Woonsocket is assessed at $200,000, the mill rate's 36 per thousand. You multiply 200 times 36, your taxes are $7,200 annually, $600 a month. Okay, now if your valuation went to $400,000 and you multiplied it by the 36 mill rate, they're double, $14,000 a year. Do you have that money? Can you increase rents that much? What's going to happen? So what this letter is saying is that a new tax rate, a new mill rate, is going to be established. But my question is, what is that rate going to be? It could go up, right? Or it could just go down a little bit. It could go down by 1 point, and they could say, oh, we lowered the mill rate. But no, you jacked up the assessments. So some of these properties, right? Willow Street, valuation is up 115% on my Willow Street. Duluth Ave, 110%. Winter Street, 45%. Transit Street, 110%. River Street, 55%. Bentley Street, 37%. That's not too bad. Franklin Street, 42%. 2nd Avenue, 51%. Okay, so those are just some of my properties. And, you know, you can see roughly they're probably about 75% increase. So what's going to happen is landlords are going to have to jack up the rents. Again, we go back to rent sustainability and affordability. It's not the landlord's fault. Okay, we're getting letters like this in the mail. What would you do? Oh, you have to pay double what you're paying now. Okay, where can I get that income from? I'm not going to get a second job or a third job. I'm going to look at people that live in my asset and say, listen, if you want to live here, this is what it costs. Again, this is unknown to me what the rates will be, but usually things don't go down, is my point, right? Values go up, costs go up, expenses go up, incomes go up. It's never the inverse. So I have a feeling that, yeah, maybe the rates will go down, but the assessments are so high that it's going to be comparable or more to what the current taxes are in general. So I just wanted to point this video out just because you're probably going to get this letter in any city or town across America that you live in. This is happening, and this is not the consequence, but the cost to pay for our beautiful home sale profits or our cash out refinance profits, or our home equity line of credit availabilities. All of those beautiful things have, I guess you could say, a consequence, and this is what it is. Okay, the cities and towns are finally getting their day, which is years past our day. Okay, so just look at it, just be aware of it, and you can also appeal. If you don't agree, there's instructions here. I set up a hearing, I believe it's in middle of June, to contest all the values because I disagree with each and every one of them. We'll see what they say. I did contest one in Warwick a few years back, and I said, hey, listen, I'm on a flight path here, so every airplane that takes off and lands, I hear. That decreases my value because of the quality of life going down. And the guy was like, yeah, that's a really good point. So you always have a leg to stand on. Even if you don't, you can think of something, okay? You can think of some way that your property is not justified in this manner. And most times, the company that handles it, I believe it's VGSI, Vision Government Solutions, I believe is the name, will entertain it and understand that you have bills to pay, and they'll work with you. So once again, any questions, any feedback, let us know. Once again, Greg Rice here in the bucket, complaining about taxes.